Money doesn't have to be the source of your worries. If you're stuck in a cycle of bills and being broke, it's time for a change. Join us today as we explore powerful strategies that will help break free from this financial strain. We'll show you how, with determination and smart approaches, payments can go from being an insurmountable hurdle to something functional and achievable. Number 1. Create a budget. Crafting a budget may appear to be an intimidating task, but it's certainly worthwhile. Concentrate on the benefits instead of dwelling on the task at hand. Stay motivated by getting into a rhythm as you go along. After all, adhering to your plan will help you to achieve financial success. Without occasionally updating and evaluating your budget, the original work you did goes to waste. Fortunately, with the help of digital applications and software, this process can be made simple. You'll find lots of beneficial free programs online that are just a search away. Number 2. Monitor your expenses. If you are like most people, this is not the first time that you have heard this. In fact, chances are that it won't be the last either. But don't let familiarity prevent you from taking advantage of its value. Making sure to keep a close eye on all of your expenses should always remain a priority. From trimming down inefficient spending habits to reinforcing better financial practices, such as saving and investing, tracking expenditures can provide invaluable insight into your overall financial well-being. To take charge of your spending habits, start by evaluating which categories are vital. You may discover that you've been putting money towards a subscription you're not utilizing. Most people believe cutting back on these unnecessary costs is an effective way to save. Investing in activities that are cost-effective is a great way to become fiscally and intellectually responsible. By spending less, you'll have the ability to see where your funds are going. Not only can this help you save money, but it also offers an opportunity for invaluable education along the way. There's truly nothing to lose by doing this. Number 3. Reduce recurring bills. Taking charge of your finances starts with reducing monthly expenses. Of course, you can't downsize on essential costs like rent or car payments without making major lifestyle changes. However, cutting back on variable purchases such as clothes and entertainment is definitely achievable if you're willing to be flexible and purposeful in spending. To save even more money, try using less electricity, switch up life or house insurance providers, or buy groceries from wholesale stores. It's a simple way to gain control over your budget. Moreover, merely because your earnings and credit score are eligible for a loan doesn't mean you should accept it. Many think that banks won't offer them what they can't afford, yet the only information banks have is their income declaration as well as debt records in the credit report. Nothing else shows if any other commitments make payments hard to manage on time. Thus, based upon your monthly salary and obligations outside of these loans, decide prudently if this loan fits in your budget comfortably or not. Number 4. Think about impulse purchases. It's natural to feel a sense of elation when making an impulsive purchase, as everyone knows. However, that feeling can soon dissipate once you realize the purchase was unplanned and likely unnecessary. To prevent this from occurring, set a limit for yourself for unbudgeted spending, so your joy is long-lasting and not fleeting. If impulsive spending is a habit for you, then it's time for a reality check. You must put an end to such behaviors. This type of conduct is incompatible with establishing good habits. Whenever you head out shopping in the future, try using the 1% rule instead. According to this principle, you should wait at least one day before purchasing something that costs more than 1% of your total annual income. For instance, if you make $60,000 annually, then wait for at least 24 hours prior to spending over $600 on any item. Do you ever find yourself debating whether or not to purchase something, as if your mind is an internal tug of war? If so, this rule of thumb can help. Try taking a 24-hour break before making any non-essential purchases, allowing time for the impulse to wear off and helping you decide if it's necessary instead of desire that's driving the decision. You may be surprised how different your opinion will be after one day has passed. Number 5. Stop using credit cards. Credit cards can be a valuable asset and an effective tool to enhance your credit score. However, if you are lacking self-discipline or using them as quick solutions to money woes, they could produce disastrous effects in the long run. If payments become difficult each month, it may be time to analyze how dependent you have become on these pieces of plastic. Continuing to rely heavily on credit cards for daily expenses will soon result in crippling debt. Not only does this impede your ability to save for retirement or pursue other financial goals, but it also puts you in a difficult situation financially. To gain control of your money and prevent yourself from accumulating further debt, create a budget that eliminates the need for using credit cards altogether. Try switching over to cash or debit cards. Open up a short term savings account and use funds from there when making major purchases. Alternatively, leave your credit card at home. These methods all help reduce dependency on relying on credit card debts. Credit cards often come with cripplingly high interest rates that can quickly turn into debt if used unwisely and cause great anxiety in the face of an unexpected financial emergency. Unsurprisingly, this causes individuals to easily become reliant on them as money appears to vanish rapidly each month, leading people to fill any shortfalls by turning to their credit cards for bills, food costs, rent and mortgage payments, and more, all the way until payday arrives again. Instead of relying solely on credit cards to finance your expenses, why not avoid them altogether until you gain the maturity and wisdom necessary to manage such a powerful tool responsibly? Number 6. Prepare for larger purchases. Don't be fooled into impulsively and recklessly spending your hard-earned money just because you saw an alluring advertisement of a glorious 90-inch 8K television. While it's tempting to grab your phone and credit card right away, this is not the smartest financial decision. Therefore, think twice before swiping that card or dialing the number on the screen. After all, $4,000 is no joke. To ensure you can reasonably purchase that big TV, many experts advocate using money from your dedicated savings account. Of course, if you have a sensible plan to repay the loan on a credit card, then this could be an option too. However, in most cases, it's not recommended. Additionally, there are countless advantages of saving up for bigger or costlier items, such as being able to negotiate lower prices and better financing conditions when paying with cash. It's also possible that the price may even drop further by the time you save enough money. For larger, more significant purchases, such as a house or car, it is often smarter to get a loan. This will prevent you from depleting your savings and investments while also providing an appreciating asset. However, for everyday items like TVs, that might cause strain on your budget if you paid in cash up front. It's wiser to set aside money over time so that your regular expenses are not compromised. Start saving early so you can enjoy the purchase without any financial worries down the road. Number 7. Reduce existing debt. If you're looking for methods to improve your financial situation and open up new opportunities, then one of the most sensible things to do is pay off your debt as quickly as possible. This is especially true if it's high-interest credit card debt. To make sure that no payment slips through the cracks, create a list of all existing debts, such as student loans and car payments. Calculate their minimum payments so that they don't go into arrears. Doing so will save you precious money in interest charges while also improving your overall finances. If you want to get out of debt fast, simply making the minimum payment won't do. First, calculate your fixed costs and how much money from the discretionary budget can be set aside for debt repayment. You can also seek ways to reduce the interest rate on debt by asking creditors for a lower rate, consolidating multiple loans into one, or transferring high-interest card balances into low-interest rate cards like balance transfer cards so that the overall interest is reduced. Once those steps are taken, come up with an effective strategy to tackle this debt as quickly as possible while developing responsible spending habits at the same time. Number 8. Cook to reduce food spending. Why not put your money to better use and start cooking at home? Rather than dining out every day or ordering takeout, you can save loads of cash by reducing your reliance on them. A fancy restaurant here and there is perfectly fine, but creating a weekly meal plan can set you up for success. Plus, the internet has tons of delicious recipes, even if you don't consider yourself a cook. So give it a go and watch how much more budget-friendly eating in can be. Why not start by making one meal at home weekly? Pack your lunches for the office starting next week, and be amazed by how much money you can conserve in the long run. Number 9. Schedule spending-free periods. Have you been struggling with credit card debt, late payments, or other financial issues? A spending fast might be just what your budget needs. This is a predetermined period of time where you don't make any discretionary purchases. By abstaining from these small expenses, you can get back on track and gain better control over your finances. If you've been looking for another great way to cut back on expenses and restore order in your financial situation, this is it. Although the idea may seem intimidating at first, don't be intimidated. You're likely familiar with the popular detox or cleansing fasts that are designed to benefit your body. Think giving up sugar or gluten for a month, or surviving purely on fruit and vegetable juices over a few weeks. In much the same way, creating an expense detox of sorts can help you get your spending habits under control and ensure you stay within budget. Did you know that in order to achieve financial wellness, a comparable approach of fasting or cleansing can be applied to your spending and saving habits? Often, these are month-long periods when all spending is limited, with only necessary items such as food, transportation, and recurring payments being exempted. If you're ready for an immersive experience into altering how money affects your life, take on this challenge. It could be the beginning of quite a profound change. Not only will your bank account benefit from the event, but so too will your perspective around finance. Number 10. Study good financial habits. As the adage goes, if you want to keep something secret, put it on paper. Sadly, most people don't take the time to read everything they should, including books that could be integral in helping them achieve financial success. Learning should never stop, and as we continue our studies, we become more adept at making sound financial decisions, a key advantage of being financially literate. With the knowledge and tools that financial literacy provides us, we can expertly manage our resources, from budgeting to saving, borrowing to investing. This puts us in a strong position to reach any monetary goals we have set for ourselves and ensures lasting financial security. It's like having a superpower. It gives you an unmistakable sense of control over your own future. Here are 2 more videos you may find interesting. If you enjoyed this video, give it a like and share the video with your friends. And for more interesting videos like this, subscribe to the channel.